The next question is Hooks Crochet Supplies issued 300,000 9% convertible bonds at par on Jan 20x7. The conversion options state that each 1,000 bond convertible is convertible into 60 shares. Then Hooks had 100,000 shares of common stock outstanding. Then this term is called as net income. So net income is the income that is available to the shareholders and the income tax rate of 30%. If no bonds were converted to common stock in 20x7, what would Hooks diluted earnings per share for 20x7 be? Now the solution goes like this. See the details what we have seen in the question. The bond interest is 300,000 into 9% is 27,000. I will come to this point about what is the tax sheet. Then see, we are asked to calculate. Let me also put you to the question once again. See, we are asked to calculate what is the diluted earnings per share. The question also says that if no bonds were converted to common stock. See, when we are calculating diluted earnings per share, it is with an assumption that as if the conversion has actually, if it were to actually happen, what would be the value of EPS? So the diluted earnings per share goes with an assumption that as if the convertible securities were actually converted into shares. So now that is the assumption with which we are going forward. So if no bonds were converted to common stock, that is what is given. So the treatment or the presentation of the income statement was in the regular format. That is from the earnings before interest and tax, interest was deducted, then tax was deducted, and now since we do not have any preferred shares, all that remaining profit belongs to the common equity shareholders, which is 240,000. So we will just look at the solution. So we understand that the bond interest is 27,000. Now, because during the year, the amount of interest was already deducted. So let's see the income statement format. So income statement format, we do not know what was EBIT. So some amount of interest was deducted. Then that is the resultant figure is earnings before tax, and the tax amount also at the rate of 30% was deducted, and the final amount is available, it's given to us as 240,000. So that earnings after tax or net income which is given is 240,000. What was done during the year, because interest has to be deducted. Now that if the conversion takes place, no need to make any interest payment. So whatever interest amount which was deducted during the year has to now be added back. Fine. So interest amount which is calculated 27,000 is added back. Next aspect of it. Now, because the interest amount was deducted and on the resultant figure, which is EBT, tax was calculated, the tax amount was reduced by 30% on the interest amount. So the tax burden is reduced. So it is a tax benefit which the company enjoys because of payment of interest. So that tax benefit also has to be cancelled off. So what's the tax benefit? Now the tax amount was reduced by on the interest amount 27,000 into 30%, 8,100 was the tax benefit, tax shield, tax benefit. Now when interest payment is not there, that advantage is not there, so the benefit, tax benefit of 8,100 also has to be cancelled off. See, that was earlier a benefit which was enjoyed. Now it has to be nullified, it has to be negated, so deduct that tax benefit. The balance of the amount is the adjusted earnings, which are available to the common equity shareholders. Now, how many number of shares? At present, they have 100,000 shares. The new shares would be, see, the explanation says that the conversion process would take place as every $1,000 worth bond now will be converted into 60 shares. But how many bonds are there? So if that is the case, see, the total value of the bonds are 300,000. So 300,000 divided by 1,000 will be 300. Now 300 will get converted each into 60. So that is the explanation. So the new number of shares are 300,000 divided by 1,000 into 60 is 18,000. So altogether it is 118,000. Just take 258,900 divided by 118,000, which is equal to 2.19. So that's the answer. Here we have to go with the assumption. When we are asked to calculate what is diluted EPS, we have to go with the assumption that what if the convertible bonds were actually converted. Okay, it is if they were to be converted, what would be the EPS? So therefore, on that note, we've done the calculation and this is the answer. I hope this is clear.